Hey, thank you for taking the time to click on today's video. Let's say that you have life insurance and you don't have just any kind of life insurance, you've got permanent life insurance. And that permanent life insurance is maybe costing you some premium every single year. It's got cash value in it. And you're thinking to yourself, based upon your personal situation, maybe you no longer have a need for the life insurance. What do you do with that policy? Now, oftentimes I find that life insurance is something that is absolutely essential. It's that permission slip to be able to spend your retirement knowing that your family will be reimbursed by the tax-free death benefit of the policy. But let's say that you're in a situation where you simply don't want the premium. You know that the cash value is something that you could be using right now, but you're just not certain what the options are. Well, today is the video that's going to help you understand very simply the 4 options that you have for the life insurance cash value. Now, the first thing that we need to keep in mind is that permanent policies are very diverse. There's whole life insurance policies, there's variable universal life policies, there's indexed universal life policies, and then there's just interest-sensitive universal life policies. By and large, everything that you're going to learn today is going to apply to all 4 of those. So what is option number 1? Well, option number 1 is kind of the most straightforward. It's the simplest, right? You simply pick up the phone and you call the insurance company and let them know that you no longer need the death benefit and you simply want to cash out the life insurance policy. They're going to send you a surrender form. You're going to sign it, send it back to them, and eventually you're going to get a check in the mail. The reality is, though, that we have to be very careful of the fact that cash value is probably comprised of principal. This is money that you have paid in the form of premiums that is a part of that cash value, and then the interest that gets stacked on top of that. So if we cash out a permanent life insurance policy, we have a lot of cash in there. We have to always be careful to ask how much of that cash value is actual principal, or what we would refer to as cost basis, versus how much of it is interest or dividends that we have earned in the case of a whole life insurance policy. Now, what if you simply need the cash value, but you don't necessarily want to cash out the life insurance policy right now? Well, one of the other options that you do have is that of a loan. You can take a loan on the cash value. And not getting into the weeds too deeply, just understand that it's a loan just like any other loan. It is going to draw interest, and that interest is going to be something that will compound and accumulate if you don't pay the interest. Now, do you ever have to pay the loan back? And the answer is absolutely not. You see, when you take a loan, let's say you had $100,000 of cash value, let's say that you had $200,000 of death benefit, and you had loaned out $50,000 from the cash value. When you die, your $200,000 death benefit will simply pay out $150,000. The company will make certain to reimburse that loan by taking it from the death benefit when you pass away. Now, on to more exciting things. What if you're in a position where you would like to have some income? Well, one of the things that is a very misunderstood and sometimes not even it's something that people don't even understand is the fact that cash value could be a valuable source of income to you for the rest of your retired life. You see, with cash value, if you choose to, you can generally annuitize the cash value within that life insurance policy. Now, what you're doing is you're essentially taking the cash value, and by annuitizing it, you're giving the insurance company that you have your contract with the cash value. In return, they are now providing you with a pension-like income that's going to last for a certain duration of time, that would be period certain, or for the rest of your life. Now, remember that annuitization, you are essentially giving up the liquidity of that cash value. If you choose to annuitize something, just like a pension, you're going to get a check for the rest of your life, but that's all the more you're going to get each and every month. So what if you want income, but you still need liquidity? You still want to have access to the money. Well, welcome to something called the 1035 exchange rule. Now, interestingly enough, we can move money from a life insurance policy to an annuity, but you can never move money from an annuity to a life insurance policy. It's like a one-way valve. And so if I have cash value in my life insurance policy and I say, well, I want income, but I want to be able to have the liquidity to do it. And oh, by the way, I'd also like to avoid taxes if I possibly could on this transfer. Well, the 1035 exchange is really built for you. It affords us the opportunity of being able to take cash value from a life insurance policy that we no longer need and move that tax-free into an annuity. What are annuities designed to do? Well, in the basic form, they are designed to keep that money safe from stock market losses. And number two, they are used to create an income for the rest of your life. And today's annuities also give you the advantage of not only having access to the income, but if something major happened, let's say you got diagnosed with a terminal illness, let's say that potentially you went into the nursing home and you need a lot of money, well, the rest of the money that's in that annuity is still going to be available and ready for you to take if you needed it. Now, what is the last option for us? If taxes aren't a big concern to you, you want to be able to pursue income, but you want that liquidity, well, guess what? You can also just consider doing a transfer directly to a brokerage account. Now, what's the advantage of the brokerage account? Well, the advantage of the brokerage account is you can take that cash and you can invest it any way you so choose. If you want to focus on, say, individual equities or common stock that are paying you 4 and 5% in dividends, you want to look at things that are more fixed income, more safer and more contractual, like individual bonds or preferred stocks or business development companies, things that would afford you maybe a little bit better interest and dividend of maybe 5, 6, maybe even 7%. Taking the cash value from the life insurance that you no longer need and transferring that directly to a brokerage affords you the opportunity of investing the money the way that you want it to be invested. So hopefully this video has been helpful to you to understand if you've got a permanent life insurance policy, you no longer need it, it's maybe costing you money and you don't want to keep paying the premium. Well, now you know that you have options. And not just one option or two options, but a whole handful of options that you can utilize to continue to give you the income that you want, the income that you deserve in retirement. If you like this little video, I encourage you to give us the thumbs up. If you like this video and you want to see more of them, click that subscribe button. We will remind you each and every week when we have a video, and I encourage you, share this with your friends, share this with your family. Maybe they have a situation where they have life insurance but no longer need it, but they've always wanted to have a little extra income. This could be the ticket to helping them do just that. Thanks so much for watching. I'm Matthew Johnson, and remember, it's up to you to make today a great day.